presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. John, what's going on, brother?
Good afternoon, Tom. How are you?
I'm doing great, man. Yourself?
Good. I want to tell you, I've been listening to you since your radio days back in '99. Appreciate what you guys do. But what I really enjoy that you brought back Tim Ord. This guy is as smart as a whip.
I am so happy for that feedback.
Yeah, because he's one of a kind. He's got to be the #1 market timer. I'm telling you, it's like he calls it really, really good.
He does. I really appreciate the feedback, man.
Yes.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching The Tom O'Brien Show. I hope you all have had a fantastic week and a fantastic day. We got a nice little weekend coming up ahead of us. Whew. Let me say, I am ready for the weekend. As Tom would always say, TGIF, no truer words have maybe ever been spoken on this green earth. We have the SPY trading off about 0.9% at 684. You have the composite off about 1.39% at 19,516. With the Dow Jones Industrial trading off about 0.96% at 44,317. Russell off about 1.24%. These are the futures, of course, at 2,286. And you got the DXY trading up a little bit higher, but not really too much, at 108.01. Crude oil about 0.48 at 70.95. Gold contract up about 0.39% at 2,887, with copper really continuing just to outperform the other metals that we look at here, trading up 2.86%. I believe Southern Copper has their earnings today, and so we'll see if they can catch kind of a bid with that as copper gets a little bit higher. Now, of course, you have silver off about 1.15% at 32.25. Let's see what else we got. Celsius up about 1.57%, $22.30. Let's see. Anything else happening? Tesla's getting smoked. All's going to plan. Listen, these guys don't have anything left. Okay, they don't. 350 is the next stop. I think this thing hovers around there. We get down to 300 shortly afterwards. We'll talk a little bit about them, but China's, that's decreased. They're not selling in Canada. Trump, I believe, what did he do? He shut off, funding for highway EV chargers. So what is Tesla's next kind of step? Of course, they're going to try to impress everyone with autonomous driving, totally unsupervised autonomous driving. I don't think that will really save them. They still have to sell the vehicles, right? And so, think about this whole thing on the long term, right? If you argue they're a vehicle company still, these guys are doing a very poor job at selling vehicles right now, okay? You get the unsupervised full self-driving. They still have to sell those units because you can't just rent out or license the AI. That takes, again, a long time to run. Musk isn't even sure if unsupervised self-driving will work on some of the computers they have in Teslas now. And so, this whole conversation, them being really a software or an AI company or something like that, having to do with the unsupervised full self-driving, that takes a long time to be able to bake that into the product and then utilize it, right? And so the next push that I really think that they will do is going to be the robots. Of course, some of the headlines that were coming out is they were pushing more hands at one of their factories for Optimus. Excuse me. I think they're not a leader in robotics. Of course, you have Boston Dynamics. You have a bunch of Japanese companies who are doing some really interesting stuff with robotics designed for factories, right? One of the things I have argued about humanoid robots is they're not really, the human body is not evolved to work in a factory, right? There are better ways to kind of do these things. Of course, we've built factories around us. I understand that. But you look at some of the ways that the Japanese try to deal with some problems regarding automation within factories. They use things much more like designed like tentacles. I know that sounds weird, but that's kind of the way they approach it, right? And there's better ways to make something that works better in a factory. So, I mean, in my opinion, the Optimus robot is just kind of a hype machine, you know? I don't know who uses those, who will use those. I find it very weird existentially for Musk to do this, meaning he is someone who is very much for growing the population on Earth, but then he's actively trying to create something that would get rid of jobs, especially kind of low skill, low barrier to entry jobs. It doesn't really make much sense to me. And seriously, take some time this week and look through the ways that people are trying to automate things going on in factories. I mean, it's very interesting, but it's certainly not, you know, an anthro approach to the whole situation. So they'll try to push Optimus. I'm sure that will get some hype, but here's what you got going on is that the entire market is, in my opinion, afraid of illiquidity with the potential for trade wars, right? And so, again, you saw that when the tariffs were being threatened or, you know, right near application, that you had, of course, cryptocurrency blew up. I think that proves, at least the way that the market interacts with cryptocurrency now, is that it is a risk asset and it is supplementary to the rest of the market, meaning that once people believe the market is probably a little bit oversaturated, they pump into Bitcoin and other cryptocurrencies. So you saw that fear occur and people just wanted to get money. Now, over the long term, if you know these tariff threats kind of stop, I believe a lot of capital goes into the U.S. As other countries are kind of struggling a little bit. So we'll see what happens with that on the macro scale. But Tesla, I don't think, has a reason to even be at this level, right? I mean, we were calling this like earlier this week, right? I mean, we're in the mid 400s, 400, like, you know, let's just take the high here, about 420. And we're now down at 362. You know, I mean, it's like, that's a huge movement to the downside. And I don't believe they have any kind of ramp going forward. In fact, I think things get harder for them. Now, as I've said in the past, this is not part of my short thesis on Tesla, but it is something to keep in mind, is that what he's doing right now is somewhat controversial among everyone, I would suppose, right? So he runs a big risk profile that way. You know, if, let's say, some coalition in our government decides, hey, you know, what you're doing right now by seizing treasury payments, even though they're saying it's only read permissions, which is whatever, everything he's doing, you know, he gets a lot of heat on him. And if they find anything that he's done wrong and they're able to convince enough people, I mean, he can get embroiled, you know, in any number of legal issues. Again, I wouldn't really weigh that into my short thesis on Tesla. I think that's enough saying their business is in trouble just at these valuations. But it is something to keep in mind, you know. And if for whatever reason he bumps heads with Trump at some point, then you're really in for a world of hurt, right? And that's what you got to keep in mind with people, you know, who have relatively larger egos, is they can really end up butting heads in a major way. That's all just human management, right? So something to keep in mind. Fundamentally speaking, though, the company, I think, has problems at this valuation. So stay right there, folks. We'll be right back. We'll talk about a few things today.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. So we were talking a little bit about Tesla, just doing that whole kind of lecture that I am constantly on, but it's going to continue to happen until the equity price drops down and that valuation becomes more in line with reality. SMCI up 4.55% today at 35.37. If you guys want to know, because I think it's just nice to discuss this kind of stuff, I'm looking at my personal account here. Have a calls 37 strike February 28th is what I'm looking at right now. Now that is a massive risk. So I'm not risking really too much. The cost basis is not extraordinarily high, but I just wanted to have some skin in the game regardless. If they report well, I believe this stock will take off. This is one of the major players in liquid cooling. Now, of course, there is some conversation that NVIDIA has tried to redirect orders essentially away from Supermicro, right? So there's, when I mean this is risky, I don't just mean it's risky because of what's going on with the auditing. I mean, there are some actual substantial risks just in the way this business is operating. You have a lot of dark pool buying. You've had large purchase by insiders leading up to February 11th. Some of the things I really want to outline on this, you run a risk of them having to restate past financials, which maybe doesn't matter as much if they're able to say, hey, you know, whatever, I know things in the past weren't so great, guys, but check this out. This is all audited. These are the legit orders we have right now. This is going to blow up. And listen, I am extraordinarily bullish on data center buildouts. I mean, what was the number? They had something about $200 billion is going to be spent in 2025 on from all of these big hyperscalers on data centers. I mean, you saw with every big name, Amazon, Meta, Microsoft, and so on, Google, right? I mean, their stocks got obliterated. No, I don't say obliterated. That's not really the way to say that. But they didn't stun on some of the earnings. And one of the things that we've been talking about on the show, I mean, even going back into September, right, was that investors might not be super interested in these large hyperscalers in 2025, right? Of course, you run the risk of some growth slowing down, but the big thing is the capex is going to be unbelievable, right? And so the fact that you know, the general public figuring out what distillation is on some of these models, you know, didn't freak out because, of course, these large hyperscalers already knew how all of that operates. they still are going to maintain that level of capex, so I'm big on it. If SMCI can kind of say they've gotten their act together, they have an auditor BDO right now. They are going to speak on Tuesday, and then they should be reporting by February, or at least their deadline is February 25th. So these are all things to keep in mind with it. One thing that bothers me about SMCI that is not something that's very much spoken about at all is in December, they had reached out to Evercore for potential private investment in public equity. And that makes me very nervous because they should have been doing operations no problem throughout all this time. And maybe their equity price was so subdued that they couldn't use this for funding. You know, there's a lot of questions on that, but I never like to see a company that has their foot in an arena such as they do that is looking for private funding, right? I mean, that kind of shows that you might have some problems. That, I think, is one of the biggest risks for SMCI that's just not spoken about at all. But you are trading up 4.67% today. Had a nice rally to the upside this morning, slowly kind of sold off, maybe to be anticipated. We'll see what happens at the end of this month, and if they just expire worthless or I end up making some money. So it'll be interesting. Now, you know, I do think that if everything's clean, and we'll talk about this when it happens, but if everything's clean on their balance sheet, they're past all of this kind of nonsense that they've been pulling for the past 2 years, and orders seem very good, SMCI will benefit very heavily. I'm probably myself get into shares at that point. But this is all very, very much dependent of what the news is on February 11th. If they release earnings, you know, you'll be in a good spot for them. And again, they have until the 25th entirely to publish, or they get delisted. So, yeah, enough of going on relatively risky plays. Let's take a look here at Affirm. This is an equity that we have spoken about multiple times on the show. They do buy now, pay later loans. One of the things I want to speak about, and again, we were talking, what was it, January, that this might be the move to get into Affirm. Now, unfortunately, I've been so sidetracked with other trades that I'm doing that, of course, also trying to focus on my main job here, that I just didn't get any exposure into Affirm. We did a little bit on earnings, the last one that they had. They had a nice leg up there, but a surprise one of $20.4% right now to the upside. This is really pretty impressive. They had earnings coming in at 23 cents per share, ahead of the 15 cents per share loss expected by analysts. The company also reported $866 million in revenue and showed 47% growth from a year ago. And this is what we were speaking about. The American people are crushed for money. Things are so unbelievably expensive. More people than ever, and on a percentage basis, right? Not just numbers, which is the way a lot of these headlines are fooling people, or just presenting the information when they say, oh, you know, credit card defaults are more people than ever are doing it. Well, that would make you think like, oh my gosh, there's something really wrong systemically right now. And that's just numbers. But you have more people taking out debt than ever, right? So you would expect an increase. So really what you need to do, obviously, is percentage loss or percentage increase. And that has ticked up. More people than ever on a percent basis are paying the minimum amount on their credit cards. Things are extraordinarily expensive right now for everyone. Rent, vehicles, and these are things you absolutely need. You know, I mean, this is not just I'm spending this on, you know, whatever, and I'm having fun. I mean, this is, people are strapped for basic goods. And with Affirm, the buy now, and Klarna also, these buy now, pay later loans will continue to be very, very strong until conditions improve for the average American, right? Now, this was a really knockout kind of quarter, but I think that Affirm has a great road ahead. I like their business model. Of course, they get paid by vendors to be able to host this on their platform. They have very good underwriting. Again, you can check all this out on their website. I really recommend it. Delinquency is very low for them. And additionally, they are securitizing the debts that exist. I guess you could call them debts, right? So these are asset-backed. And I remember when this company was first getting some appeal, I asked on this show, and I wonder if they'll kind of do that, and that might be something good for them, you know. So we'll see what happens, especially when you have such a high standard of underwriting, you know. And traditionally, I think they've hovered around, like on average, a 2% delinquency. So yeah, interesting equity. I mean, I think this has a lot more that it could probably go. You're at 20 billion market cap, but I don't see things really getting better for the average person, income-wise, and I don't think prices will really deflate. You know, we can talk a little bit more about that when we get back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. Buy now, pay laters, I think, will become a fixture in American life. It seems this is like one of the ways that we kind of do things in this country is that, you know, common person or people maybe on the lower end of the socioeconomic spectrum, the baseline conditions don't really change, but more things are created in order to make it more viable, which I think could be a problem, but that is what I see happening a lot. And so I think a firm with buy now, pay later, I think this will become very standard. I don't think this is going anywhere. I don't really see wage growth increasing, jobs, or basically like you're trying to find a new job right now, like you're probably going to be pretty hard pressed to find one, especially in white collar. Some of the numbers coming out from that are pretty bad. So yeah, I mean, a buy now, pay later equities, I really recommend, doing your due diligence on them. Again, I'm very kind of bummed. I'd been thinking about this one for maybe, I don't know, when I knew it was coming out maybe 2 weeks ago or something like that, and I just didn't get in. But I still think there is an argument for a firm and definitely buy now, pay later. Speaking on all of the earnings, and I want to say too, I don't know if the prices are going to get better. We're definitely not going to deflate. Obviously, something like eggs, yes, okay, will be fine, and they will come back down. But I mean, we're looking at general inflation. It has slowed down, obviously. Trump is going to try to slow it down as well by essentially doing what we were kind of speculating that he might do when he won in November, which was drilling a ton of oil, because this whole thing is the interest rates. I'm starting to kind of get that together, is it's really the interest rates, right? And additionally, he said, we're gonna have the Fed lower interest rates. That, of course, probably was not going to work, and it didn't work. We had kind of speculated that he was going to just flood the market with oil. This would bring down energy costs and kind of depress inflation. I think you just had, what is the headline for that? Yeah, you just had Besant say that's precisely what he wants to do. And the idea, of course, is also to target the 10-year and bring down the rates on the 10-year. And we were speculating that that would probably be the point of the sovereign wealth fund, right? Which would be to do some kind of quantitative easing almost, right? So buying a bunch of these bonds on the market and then really crush the interest rates on it. Now, the problem you run into, I think, is that food is still a major driver of inflation, obviously. Housing is kind of catching up since those numbers are a little bit lagged. But you're having, at least in home sales, pretty good grid iron, right? Pretty good gridlock there. And what's going on with that essentially is that you had people who were buying the past 2 years, very low interest rates, or let's say, geez, it's amazing, it's 2025 now. Within the past 4 years, they had very low interest rates. Like, I have a buddy who got a home at 2%. It is crazy. It is crazy. It's crazy. That'll never happen again, right? So people buy very high, right? Because you have an inverse relationship there between the price and the interest rate. And they want to sell now because things are kind of expensive, but they don't want to take a loss on the full amount of the home. And so you're getting this thing where nobody wants to buy a home at a value of something like a 2% mortgage when mortgages are 7% or something like that. And so one of the things that I get worried about is that if you lower the 10-year yields, you have mortgage rates kind of pegged to that a little bit, you start inflating the prices of homes yet again. And I'm not sure that's exactly what would happen, but it's something that I'm, kind of thinking about and doing more research on. But this is, it's a very interesting kind of world right now. So I don't know. We'll see what happens. Maybe gas will be cheaper. That's great, but I don't see food really coming back down any significant amount, except for things that are insane, like eggs. General services are going to continue to be expensive. So anyways, think about buy now, pay later. Because we live also in a weird time where even if people are kind of struggling financially, you have all these different services and things that people do to make themselves feel better or just to operate in this world, right? There's just more to pay for nowadays. And so I think buy now, pay later definitely is a way to do it, right? If you're strapped on bills all the time because you don't make enough, you still, want something because why not, right? And you don't see your conditions getting any better, so why not do buy now, pay later or something like that? I think that will be the psychology that a lot of people have. We're taking a look at earnings next month. I'm going to pull up this chart here. You have on Monday, Still interesting earnings. Obviously not as interesting as this week was, but that's all right. Let me see here. Get this up. Monday, you have McDonald's, Vertex Pharmaceuticals, which caught a huge bid, Rockwell Automation, which is very interesting, On Semiconductors. And then on Tuesday, Coca-Cola, which I'm kind of interested in. I think that, one of the things I've always said is kind of what do you see, like, and this is a really like traditional way of maybe evaluating whether or not you want to buy something, but what is everyone doing, right? Like, I knew Starbucks was probably going to have some issues a little while ago, and same with Nike's as well, because everyone that I am around in my daily life or just random people that I see on the road, I don't see them consuming those things anymore, right? Coca-Cola, I've definitely seen a massive spike in people drinking Diet Coke. Diet Coke is getting memed right now online and in a much subtler way. So you have all of the young women drinking Diet Coke. Of course, you have the exposure from Donald Trump. You have a lot of people talking about Diet Coke, again, as a way to like kind of joke about the cultural meme in society. And then additionally, you have Costco going back to Coke instead of Pepsi, right? And so I could, as silly as that sounds, I could see that generating some kind of hype around the equity. Of course, that's not a pricing. I'm not calling a price target on it either. But as it stands right now, I think that warrants maybe a closer look into Coca-Cola for earnings on the 11th. You have Shopify, which I'm very interested in as well, and DoorDash. So one of the things that DoorDash has done recently, and I noticed this, I was actually ordering from Red Mesa Cantina. If anyone's listening from there, call us. Maybe we could do a partnership. Just kidding. But you could order online. Traditionally, you would order, this is going along for a lot of restaurants, when you're ordering online, you'd usually be able to do it for Google. And it was there's a little fee that Google would charge you, but it wasn't really intense. And so I'm looking at options no longer there. And I have a selection of basically softwares or whatever vendors that I can place the order through. And this is a newer thing. And DoorDash was the top one. So I'm like, okay, whatever, let's use DoorDash to place this order. Again, I'm gonna go pick everything up. They don't have to do anything. We'll talk about this when we get back. Anyways, these guys are charging an inordinate amount of money just to allow you to place an order. They don't do anything else. Folks, stay right there, I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. This is Jacob Shooper watching the Tom O'Brien Show. This is our last full segment. Of course, we have a short one right at the end. If you're watching us on YouTube, thank you very much. We're happy to have you here. Please consider liking this stream and subscribing to our channel as it helps us out immensely. We have a lot of stuff planned for you guys this year, and we would really like to add some more people. It's been amazing seeing some of the new people come in as well. So welcome, of course. Was talking about DoorDash. Long story short, it seems like they've gone straight just to validating pickup orders at restaurants. I went to look at a menu item that I always get from this restaurant, and it was something like 20% higher in price. And I thought, wow. I mean, I can't believe, is inflation hitting this? I mean, what is it? And I thought for a second, like, this actually doesn't make any sense at all. And so I went to another vendor that allows for this kind of order to take place. And it was a way smaller fee. So DoorDash is charging an extreme fee for placing order. And what I would reckon is that most people are not going to really pay attention to that and just go ahead and place the order as well. So it'd be interesting to see how much Dash makes from that. Again, that's coming on Tuesday, February 11th. So get used to that, or get ready for that rather. We have BP, PIC, Energy Transfer. Let's see, we got Wednesday. Cisco. I'm just staying away from Cisco. CVS, and then Waste Connections, and then and Robinhood. So Robinhood on Wednesday, February 12th. They, I think, are really just the most dominant trading platform among young people. I think that will continue to grow. You have Palo Alto on Thursday with Applied Materials. These will be huge. Duke Energy, as I shake my fist. And let's see. Ubiquity, nice, and Fortis and Moderna. So nothing, in my opinion, super, super exciting like you had this week. But interesting nonetheless. Of course, we'll be following those. And if I decide to take any position, of course, you guys will be the first to hear about it right here. Of course, you had Amazon fall. I mean, everything, again, with these large scalers is just kind of let them burn a little bit. They will be back up at growth levels when these agentic AIs start rolling out. This will be massive. But again, we are right now in the building phase. I mean, oh man, you want to talk about this, the building for data centers and the power for them. I mean, Oklo, man, up 16.67% at 55.74. I mean, in September, we were trading around $7. I mean, how about that? And then, kind of as a combo play with that is Lightbridge. Now, we looked at Lightbridge a little bit. Again, these doped uranium. I think this thing wants to go back up to 420 and test that, You're trading up nearly 40% right now. On no news, this must be some kind of larger firm buying. I'm not sure. I'll have to check the forum forums to see if there's any kind of massive insider buying. But I mean, you're up 39.56%. They, of course, had a memorandum of understanding with Oklo. One of the things I really want, again, to tell everyone is that Oklo has not developed anything yet. A lot of these are plans. These things take a very long time to build. Again, the strat that we've been running with uranium is when you get these massive runs, you come right back down, and you need to buy at these lower levels, and you get some point another run to the top, right? Because a lot of this is going to be very news generated until we actually start breaking ground on some stuff, right? We take a look at some of our other guys. Kamiko is kind of an interesting situation. They're up 2.24%, obviously massive gap down. They're having issues, again, one of the things I had written in that little paper on uranium was that CCJ has a big risk with their exposure in Kazakhstan, right, with Inkai mine. Now, traditionally that should be good for them, right? I mean, they can mine for cheaper in this country, but Kazakhs essentially are raising rates for mining on foreign miners, which is a big issue. And I think there was something else that went on with Inkai to where it stopped being operational for some period of time. Regardless, when you're in those kind of old Eastern Bloc countries, right, you run massive risks when you operate in them, okay? So Kamiko is interesting as it is. I think it's much more of a long-term hold. I don't see a reason for this stock to really run up to the way it has. Now, of course, we are off the, bottoms there of like 35.43, and we had a nice run up to 62.55 last year. But I think they have some operational issues right now that might temper any kind of exuberance around uranium. I mean, Lightbridge is way outperforming anything else, right? I mean, you have UEC up 1.7. You have the one that I really like, which is Quad U. I believe they also have exposure, Dan, if you know this, let me know, to vanadium as well, and they haven't really tapped that. I would recommend listening to the earnings call or reading the transcripts from Quad U. I like the CEO. He seems like a real go-getter. He knows what's going on. These guys are actually mining, unlike UEC. So it's some interesting stuff, but keep in mind that when you get these massive run-ups, they're going to come back down because there's not been any real tangible movement in the spot price of uranium, at least to a point where it would wager, Lightbridge rocketing like this, right? And Lightbridge, again, has a unique kind of form of, enriching their uranium. Still at 196 million market cap. If Lightbridge gets picked by any of these, even operational ones now, I mean, you can see some really substantial movement to the upside. Now, I would say that look for the companies in uranium that are buying the contracts now, right? Because that's really how this works. It's the case with a lot of commodities. You just buy contracts at, some predetermined price right now, and you'll buy that throughout time, right? And so important to keep stuff in mind like that. That was the same thing that the Quad U CEO was talking about in their earnings report. Again, really recommend checking it out, especially when you're trading at 1 billion here in Lightbridge is at 196 million. On that same kind of note, we take a look at TSSI. That is going to be trading up 1.47% today. We did a lot better earlier in the morning. No wonder my portfolio was getting eroded halfway through the day. We made a low again of 1464, creeping back up. I mean, these guys are up nearly 6% earlier. Still a 364 million market cap. I think they have really good exposure to these kind of server build-outs. And then let's take a look at Nebius. Okay, so Nebius finally got some analysts, wow, up 10.33%. Wow. That is the only thing saving my hide right now. Trading at 38.12. You had, I think they were on CNBC, an analyst brought them up saying we love Nebius. So really looking forward to their earnings. Again, this is finally getting some amazing attention from institutional investors, and I'm really looking forward to see how Nebius flies. I have a lot of my portfolio is in this equity. So of course I have a bias for it, but I wouldn't have done that unless I felt very, very confident. And this is not one of those like funny little risky ones like SMCI that I'm doing, So it's neat. I'm really happy to see these kind of things take off. And really, I do believe the future is it's going to be forced to be AI, to be compute, So it's something cool to look into. Now, there might be a level of valuation shift that has to happen with Nebius. We'll see really what happens with CoreWeave. I'm surprised it didn't IPO, but they're anticipating an $8 billion revenue, which is far higher than they had last year, which is about $2 billion. And I don't know what their supposed market cap would be right now because it's a private company, but just keep in mind that in the past, Nebius was trading at half revenue, but something like 20% of the market cap for CoreWeave. That, of course, needs to be reevaluated, but don't get too scared on it just yet. Folks, we'll see you in just a moment.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everyone. Looking in the den, yeah, LGO, vanadium for sure, Dan. Check out Quad U, though. I think, if I recall correctly, that is, they have exposure to that. They just haven't extracted it yet. And then another just general question into the den. And guys, get into the den. I mean, it's great. Seriously, just go to TFNN.com. It is $1 a year. Again, we only do that just so we keep everyone safe. We know who's in there, you know. And it is a simple step process. Step 1, step 2, step 3, and then step 4. And guess what? You're in there. You're communicating with everyone. I mean, man, some of the stuff that people were talking about in the den for a long time, Dan, even stuff that Dude's been talking about. Well, if this could load, I could show you. I mean, you have BBAI, right? And this is what's so good about having these kind of trading rooms, right? And it's not like, before I started working here, you know, when I was young and in college, I mean, I was familiar with like trading rooms. You know, they make you pay an inordinate amount of money. It's just kind of a weird thing. There's a lot of pump and dumps that go on. This is, in my opinion, and I'm not just saying this because I set the whole thing up and I work for TFNN, but it's genuinely just one of the best trading rooms I've ever been in. And for $1 a year, I mean, that's just a no-brainer to me. I mean, BBAI, up 27.77%. I mean, it's crazy. Good moves. And that's right, yeah, Michelle, Quad U. You. Anyways, let's take a look. I think for Coke, I probably want to try to, and I'll let you guys know if I decide to do it, but get some maybe calls for it. Seems like it might be kind of worth it. The 65 calls for February 14th, unfortunately, you can either do just weeklies on it, or only 44 cents. So it seems kind of neat. I think they'll have a decent earnings report. I think there's a lot of cultural steam for them. Let's see. Well, I guess there's the music. Folks, thank you so much for joining me today. We will see you Monday morning, 9 a.m. with Tommy O'Brien for the morning market kickoff. I'm going to go get some martinis in Tampa. If you see me, come say hi. Folks, take care.